Hello, dividend executives. Welcome back. It is Wednesday. The stock market is open. So you already know we are buying stocks and we are adding assets to the portfolio. This week, we are absolutely making some big moves in the account. We've talked about it for a while. We're going to be selling some assets. We're going to be buying a new asset. And we are going to be making some changes in the account. So let's jump into it. Let's look at our record-breaking month for dividends. We did beat the 350 goal. Let's jump into the spreadsheet and let's jump into the new asset that we are going to buy. But first and foremost, I got to go through the dividends just to showcase what happened this week and also show proof of the dividends we have received. Starting all the way back in March, I'll just scroll through these quickly so you can see where the dividends come in. We started with EMB at 80 and the dividends just kept rolling in from there. NVDY was probably the biggest one of the month at 77.36. And then we also got a special dividend, or not special, I should say, but a dividend on our TSLL position that we do have. And that came in this week as well. So some big ones for the week. Obviously, we had SCHD. That was one of the biggest ones coming in here for $28.80. Of course, we reinvested that, and that got us 0.36 shares. We had TSLL come in as well. Those were reinvested as well, bought us 3.8 shares at $8.28, and that was on the 400 shares we have in the account. And then VTI came in, one of our main holdings. We had Main come in at 4.02, and then Glad come in at 4.51. So those are the dividends that came in this week. Glad is the one that's going to be coming in on April 1st. So next week, starting off our April dividend journey. And pretty stoked about the account. So right now we're up for the day 0.81% or $145. For the week, we're up $680 or 3.91%. For the month, $263 or 1.48%. So not bad. And year to date, we're up 1.71% or 3.04. So not bad for a dividend account. We have a little bit of growth in here, but for the most part, we focus on our passive income with this. So that's where we're at. So let's jump into it. Let's talk about the stocks I'm going to sell. We've talked about it in a couple of videos before, but I am going to be purging 3 of the Yield Max funds. We will see if we purge more in the future. But for right now, we're going to take a little bit of a loss on some of these, not factoring in the dividends, of course. But I want to move the funds to another one. So APLY, we are going to get rid of this. This is a Yield Max option income ETF on Apple. Apple has kind of been crushed as of late. Pulled up from the 190s down to the 170s. And yeah, I just not really feeling this one. I want to allocate funds into some more spread out assets that maybe have a better option at a higher return. So we're going to dump this one. We have $452 in this one. So obviously we got hit a little bit and we are down $110. But we're going to sell all of this and we're going to collect the $452. And we are going to exit out of that one. So APLY we are exiting out of. That's one of the Yield Max. Another one, you could probably have guessed it, is FBY. We are actually up on this position 11.99% or $21 on the total return. Only $200 on this one. So we will be booking the win on that. We will be freeing up $202 and moving on that money towards another asset as well. And then last but not least, for now, we're just going to be cutting Google's option income fund for the Yield Max as well. It's just time. This one's down 14% or $23. Only $138 in this one, so not too much, but still freeing up a little bit of buying power for other assets. So we're going to sell that. Just want to kind of consolidate. I want to make things a little bit easier when it comes to how many funds we have. I want to give it a little bit better exposure. And some of the Yield Max ones are doing really well. Amazon's doing really well. CONY on Coinbase is doing really well. And OARK, it's not doing that great, but I do like the exposure it has to it. And I'm going to hold on to that one for now, but we might cut that one later. So that's that. We are going to take we just sold $800 worth of assets or so. So we're going to reinvest that into, first and foremost, this is a new one I'm going to be adding to. SPYI. This is a S&P 500 high income ETF. It's actually pretty new. It hasn't even been out for a year. We will jump into the dividends a little bit, but just a sneak peek. It's around a 12% yield a year. and 50-ish cents a month per share. So right around that 1% mark. So not too bad. And it has 510 holdings. It came out on August 29th of 2022. It's a derivative income, actively managed. And let's take a look at it. So we have 31% in technology, 12% in finance, 11% consumer, 12% healthcare, and then split up through some other ones. And the top holdings in this one, Microsoft at 7.4%, Apple at 5.88%, Nvidia at 5.62%, Amazon at 3.96%, and then we have Meta and Google, Berkshire Hathaway, and Broadcom. So not bad. That's 34% of the assets. Those are some good assets there. And of course, they generate income off of selling covered calls. But it has some good upside potential as well. So we're going to buy some of this. Let's just come back here. Let me just see if I could just do it in shares, make it easy. Let's do 10 shares. We're going to do $500. So we're basically going to take our Apple position and we are going to move it into that. And so we are going to throw that down. That's $500. And I think it'll give us some good exposure. I'm excited to see how this one goes. Just right off the rip, if we're getting, that's $5 worth of dividend income right there, roughly every single month, just based off that amount right there. So that gives us 2.2827% of the portfolio. We will see how this one goes. It's up for the year, obviously, or up since inception, I should say, 9.41%. And that is one I've been wanting to add to the account. Just been waiting for a good buy. So that's $500. That leaves us about $400 to invest on the other ones. One of the ones I wanted to add to, we added to the account a little bit ago, but I want to add to it as of late. We are basically break even on this, only $50 here. So I want to buy a little bit more of this. We're gonna do $50. Oh, not 50 shares. Let me come back to the dollars. We're going to do $50 into EMB. This is going to be a good one. I want it long term, and I just want to slowly start stacking a little bit of this. So 1.39 shares added there. Still a really, really small position in the portfolio, but I want to see how this one goes. I want to continue to add to it, and I saw that it was at flat, so it's a good time to add to it. Another one I want to add to is going to be QQQY. We are down a little bit on this position, not including dividends, of course. We only have 1.2% of the portfolio on this. And so I did want to buy a little bit more to help average our cost down. So we're going to do 50 there. Slowly but surely, we're going to build that position up. That buys us 3 more shares, up to 19 shares or 1.43% of the portfolio. And then the last one I wanted to add to was IWMY. Same kind of thing here. We're down 2%. We have 1.28% of the portfolio. And actually, I'm going to buy a little bit more here. So we're going to buy $100 here. So maybe a little bit more than the assets we just sold. 5.62 shares that we're going to be adding here. And I think this will be good, right? So 5.62 shares. We lowered our cost a little bit there down to 1806. And it's going to increase our dividend income. This one has been paying a nice dividend. I think we got paid, what, $15? Yeah, $15 here. So this one paid roughly 86 cents a share. We obviously just increased our shares. So this, we could get this one to $20-$25. Ideally, if next month, if we do it right, we could have this buying on drip, a whole share by itself. So that's IWMY, and that's where we're looking. These are the other positions in the account. Slowly been adding to all of these, a little bit here, a little bit there. Devo's one I've been building a position in, especially VYM, and then SHD and VTI are the main backbones of the account. As everybody knows, 17% of the portfolio here, up 10% or 335, and that's just about $4,000 in SHD. And then VTI dividend coming in at 629, 8% of the portfolio at $1,700. So that's the moves we're making for today. I want to jump a little bit into this. I want to break this down, and then we can look at the spreadsheet as well. So this is a new one we added. I just wanted to show the dividend history here, and then maybe jump into it a little bit. So SPY, there's a couple of reasons why I bought this one, but obviously it gives me exposure to roughly 500 holdings. It's got a pretty steady income, especially at the 12% dividend yield, and they're writing call options on roughly 75% of their 75% of their assets. So they are leaving some of their assets for long-term cap gains. So they're letting some of the, as you know, when you write a covered call, you are you're not allowing the stock to run past a certain price. And so by not writing it on 100% of their assets, they are allowing some of the positions to run. It also is a section 1256 gains and losses. So it's treated as 60% long, 40% short, no matter how long you own it. So it helps a little bit on the taxes side of things if you have this in a non-IRA, which this is a non-IRA. So that's something I was looking at as well. And you can see that the dividends have pretty much, for the most part, been pretty steady. I mean, they've jumped between 46 cents and 56 cents for since inception, back as far as 2022. So that's good to see. This annual dividend, $6 per share. We obviously just bought 10 shares, so that's nice to see as well. $60 of dividend income we can expect from that roughly this year. And obviously we're going to have drip on, and we're going to keep adding to it. So that's SBYI, and that is the newest addition to the account. The one last thing I wanted to look at, we got to look at the spreadsheet because we did have a record-breaking month. All the dividends are in outside of Devo. That'll come in at the very end of the month. We're at $354 of annual income. Monthly income. Absolutely slayed it. Literally almost doubled February. And what's crazy is March of last year we were $8.87. So cool to see $354 worth of dividend income come in passively. I didn't lift a finger for it, and we just got paid straight to the brokerage. So that's good to see. One thing I also wanted to highlight too. This is obviously just our dividends. We cut APLY at a loss of $110. We did receive $80 worth of dividends, so we really only lost $30 overall with APLY. FBY, we got $40 worth of dividends. We got $20 worth of cap gains on that, so that was still a win of $60. And then GOOY, we were down 23 on GOOY, but we did receive $16.77 worth of dividends. So really on that one, it's pretty much a wash, a loss of maybe $5. So not too bad all in all. That is what we got. We are up to, we are getting close to breaking our 2023 dividends. And we are seriously, we're in the first 3 months of the year, so that's pretty awesome. I think we're going to bust that pretty quick. We'll probably hit that next month. No problem. So pretty cool to see in 4 months of 2024, we'll break all of 2023 dividend income. And we're just slowly knocking on the door of all of these goals. So $354 this month, or this month in dividend income so far. We'll probably have another $3 to $4 come in Devo if we get that towards the end of the month. And we just keep chugging away. So not too bad. That's the update for today. Thank you everybody for tuning in. As always, we keep it rocking and we keep investing each and every single week, and slowly we build that passive income. So thank you everybody, and we'll catch you next week.